Florida insurers may leave thousands with unpaid claims. That's a scary headline, but what's really behind it? What's going on? In tonight's show, I'm going to be getting into that. I'm going to look at that. But this show here is Bubble Watch, and it's all about the Jacksonville area market up here with the housing market and what's going on, where I give to you the weekly numbers of the real numbers here in real estate. That's right. Tonight, I'm going to be looking at also, aside from this headline, I'm going to be looking at the active listings, okay, which is your inventory. How many sold in the last 7 days? How many went pending in the last 7 days? Well, how many are actually under contract? Look at those withdrawals. Look at the new homes that are for sale. Look at the new home inventory, what they've got, and a whole lot more. Because, you know, I'm just a regular guy who happens to be a real estate agent up here in Northeast Florida, and every week I take you into the back end of my MLS account. And that's right, and I show you these real numbers that are coming right from that. I've been doing it since May of 2022, and I keep all that in track for you. So right now, let's start off with those active listings to see what the inventory is up here in Northeast Florida. All right, here we are in the back end of my Northeast Florida MLS account, and we're gonna, well, first I want you to focus into this area right here where it says there view results, because as I click on the different statuses, that's where the results will show up. After all these, I get all this information, I'm going to export it into an Excel spreadsheet, or I'm going to take even more information out and share it with you in my own Excel spreadsheet. So let's start off with those active listings. That number is 9,812, and that is your inventory. Okay, next let's look and see how many sold in the last 7 days. That number is 421. Okay, next we're going to look and see how many are active under contract. That number is 1,171. Now those are people that are under contract for a home with contingencies, and that can be repairs, finance, or appraisals, or anything else, or having to sell another home. All right, next we're going to take a look and see how many of those that were active under contract went pending in the last 7 days. That number is 326. And when you add up the pending and the active under contract, that is your total under contract. Next, we're going to take a look and see how many people withdrew their listings in the last 7 days. That number is 81. Next, we're going to take a look and see how many expired in the last 7 days. And that number is 156. Now, the difference between the two. Withdrawn are active listings that just can't be shown. People have restricted the showing temporarily for various reasons, and the ones that are expired are ones that actually didn't sell, and it's no longer an active listing. Okay, next here we're going to look at how many new homes sold in the last 7 days, and that number is 84. And next we're going to look at how many are active, and that would be the new home inventory. That number is 2,336. Okay, the next thing I'm going to look at is out of active inventory for all is how many are statused as foreclosures, pre-foreclosures, and short sales, okay? This isn't the total for the region up here. This is how many are actually listed in the MLS for sale under these statuses. So the amount of homes that are listed as foreclosures are 137. The ones that are listed as pre-foreclosures are 16. And the number listed as short sales is 42. Okay, all that data there, I went and I downloaded it into an Excel spreadsheet that's going to look something like this, okay? And this is just a big mess to look at for everyone. So I created my own Excel spreadsheet, which breaks down the numbers a lot better. So we're going to put it all into that, but also I've got so much more information that comes out of what I downloaded than what I just showed you right there in the back of the MLS. I'm going to cover that in charts in my Excel spreadsheets here tonight, okay? Now let's first see, while we're waiting for all those numbers to compute out, let's see what those interest rates did this last week. All right, here we are. We're going to look at the rates. We're going to start off with the 30-year fixed and conventional, and at the bottom of each of these charts is where we left off last week. So here it was 6.68 for this, and we ended up at 6.91 up here at the top. So we see we have an increase. As you can see, the arrows on the side show the amount of increases during the week, and then this column right here shows what it was last year at this time. So we see that it's practically 1 point less than last last year. There was a time there, look at the second one up from the bottom, where it hit 8% there at this time. Okay, so now we are still below 7%. So even though it's not great now, it's better than it was a year ago. Okay, as we look at the FHA, which is generally a little bit less, we see last week we were at 6.13, ended up at 6.38. So again, red arrows lead the way. And the VA rates were at 6.15 last week, red arrows up, and we ended up at 6.4 this week. You know, a lot of people right now are really frustrated, okay? They're looking at these rates that keep climbing up, okay, when everyone was told everything's coming down. But remember, mortgage rates came down a lot before the Fed actually lowered the rates. But while they dance together, those rates with the Fed, they're not really married yet, okay, those together. So just because the Fed, you see headlines that say rates are coming down, they're lowering it a quarter, they're lowering it a half, doesn't mean mortgage rates will follow. They generally do line up kind of. As you can see, versus what you were paying last year for rates, this is still a lot better, but there is uncertainty, plus you got the election coming on, so that creates all this. All right, right now let's get into those Excel spreadsheets that I was talking about. All right, here we are into my Excel spreadsheets, and for those of you that are new to the show, here what we do is we look at the yellow column right here is season 3, week 24. That's our current week right here. The previous yellow columns are the previous weeks. Now, directly next to the yellow column and that white column is last year at this time and the numbers, and YOY is the percentage of year-over-year differences, okay? And over here in the light blue is SFH, and that is single family homes. That's where I pull just the single family home data out and show it separately. Over here on the right here, you see this column here, shows what all these things are, like the active sold, active under contract, pending, and so forth. So let's start off, and then that way you can compare these previous weeks. That's what's so great about my Excel spreadsheet. It's easy to look at last week's and weeks before. Okay, so let's start off with this week's here. We look at the active listings, 9,812, and as you can see, that difference there, it's an increase of 38% from last year, okay? Now, it's also an increase from the last 2 weeks, so we see the inventories going up. Sold, 421, okay, almost about the same as it was last year at this time, but look at the last 2 weeks. We had this big dip going down, 274, then 269, and you know what? I had somebody comment that because I mentioned that the hurricanes may have had a factor in some of the sales, you know, oh man, they trashed me over that because it says, no, it's the Jacksonville market. Everyone knows it's down. Okay. I said, well, that was just one thing, the hurricane. I didn't say it was it. I mean, it could have been, okay, is this the beginning of the down, spiral down? You know, I just threw it in there, but they got upset over it. Well, okay, so how do you explain it going up? All right, now, remember the hurricane factor wasn't just these two hurricanes. We had Debbie, that Hurricane Debbie, that was like way before those. And that threw people into, you know, like prep mode and storm mode and all that, because we didn't know if that storm was coming through Jacksonville. Actually went north of us, but still, it causes a slowdown, it creates mess, places close, everything. There was a disruption over these hurricanes. Now, I don't know if that's what did it, but it's funny how just when the hurricanes were is when we had these numbers change. Although that's why we watch this every week, and that's what I like about this show, where we look at these numbers every week to see what's going on, because we're trying to find when that bottom hits. All right, active under contract, 1,171. That is down. Okay, pending, 326. That went up a little bit. So our total under contract, 1,497. So that actually went up from last week, but it's still down from a couple weeks ago. And you can see it's a pretty good increase from last year. All right, withdrawals 81, expires 156, new homes sold 84. All right, look at that, almost twice what they were 2 weeks ago. Okay, definitely up from last week. Again, okay, Yeah. All right, if the market, is the Jacksonville market's bad. Now, these numbers aren't good, okay? I'm not saying they're good, but I'm just saying, how are we going up, okay? Again, we just watch it every week and see, because there's all kinds of factors. And then we're going to be getting into the Christmas season. New homes active, 2,336. Now, in the orange down here is the percentage of new homes sold that are new. So as you can see, for this week, the percentage of new homes sold was almost 20%. So about 1/5 of all homes sold are new construction homes. And those new homes are easier to get insurance, and generally the rates are less. I've talked to some people, and I can't believe how good some of their rates are compared to everything else with these new homes. All right, over here on the right here, SFH, single family homes, those are our numbers there for the active 7246. Sold was 327. Active under contract 959, pending 261, gives us a total under contract of 1,220, withdrawals 55, expireds 108, new homes sold 59. That's up, okay, from those two disastrous weeks also. New homes active 1818, and the percentage of single family homes is a little bit less. It's just over 18%. Okay, so how did people pay for these homes? All right, cash. 25%, 1/4 of all deals was 25%. So we've dropped back down to what we normally we're seeing. I mean, we had a couple weeks there over 30%. Conventional 41%, FHA 14%, so that went up some. VA also went up, and others stayed about the same. Foreclosures, okay, here's another one that these here are inactive listings that are foreclosures. These aren't the total foreclosures for the whole area. These are just the ones that are in the MLS listed for sale. And again, I had somebody upset that I cover these numbers, but you know what? This is what's in the MLS. This is what I'm showing, I mean, like it or not, this is what it is. And that's what this show's about, showing you the numbers that I pull out of the back of my MLS. Foreclosures 137, pre-foreclosure 16, short sales 42. So we did have a little bit of a jump there to 195 for the foreclosures this week. Okay, here we're showing the percentage of homes that sold under list, at list, and above list. So 3/4 of all homes sold under list price. Okay, homes that sold at list, just over 16%, and homes that sold above list, 9.5%. So still a pretty good amount up there above list price. And I'll tell you this, I've said it in other weeks, the amount that's above list price isn't a lot. A couple of them are, but for the most part, it's not a lot like it used to be. These numbers here below show you the actual units, okay? So that was 312 of them were sold under list, 69 at list, and above list was 40 for a total of 421 units sold. Okay, next we look at the new homes. Okay, well, nope, we're not looking at the new homes. We're looking, I'm sorry, jumped ahead. We're looking at the homes that sold in price categories, okay? So these are the homes that sold 500 above, in the 400s, 300s, 200s, and below 200. So you can see over 30% sold at 500,000 and above, okay? I mean, that's our highest percentage of this groups is the ones that sold 500 and above. In the 400 range, it jumped up from the last couple weeks to 15, almost 15.5. Homes that sold in the 300s, 20%. Homes that sold in the 200s, okay, 21.85, and homes that sold below 200 dropped to 11.16. And you can see here also, this is what I'm showing now, the actual units that sold at that. So 132, 65, 85, 92, 47 for a total of 421. All right, now we look at the new homes. Okay, new homes that sold under list. Okay, this week, 64.29%. Homes that sold at list, 21. And homes that sold above list, 14.29. Okay, and then here is the numbers for the actual units right below. Hey, if you like the way that I put this show together, then just give me a thumbs up. And if you want to subscribe and be part of Bubble Watch Nation here on my channel, then just hit the subscribe button so that you'll get all the latest videos. Because I also I'm standing in front of this house, and this house is going to be one that's going to be featured on my Sunday night show. So I do have a lot more than just this market update. Okay, so right now, what we're going to do is look at what is called MLS Advantage. Okay, now that is, I was just showing you all the numbers from the Northeast Florida MLS, and that's the board I belong to, and that's the largest up here. But MLS Advantage takes in these smaller boards up here in Northeast Florida and gives us a bigger picture of the actual sold, what's going on up here. So I also break it down by county. A lot of people like to know how many sold in St. Johns County, Clay County, Duval County, stuff like that. And I've been tracking those all these past months too, and years also. So we've got all that data for you. So right now, let's head over to MLS Advantage. All right, here we are in the MLS Advantage. And down here, we've got the 9 counties: Baker, Union, Bradford, Clay, Nassau, Duval, St. Johns, Flagler, and Putnam. So what I do now is just go over here and hit the search button. That comes up with 590 properties. All right, when I put those into the counties now, we look at it this, we've got Baker County was 2, Union 1, Bradford 5, so they really jumped from last week. Clay County had an increase to 56. Nassau also had a really good increase to 57 from last week's. Duval 210, St. John's 142, Flagler 99, and Putnam had a slight increase to bring it to 18, so our total 590. All right, we're going to take a quick look here at the condominium numbers, and it's basically the same format in the sheets. There are a couple sheets that are a little bit different than what I just went over with the main. So as you can see here, now condos I started later, so that's why the week is different. This is week 34 of season 1 for the condos, and here we are in the yellow column since there's no previous years and stuff. So right here you can see right next to it is the previous week. So we just highlight the yellow in the main week. So here we are for this. The numbers 1141 are active, 32 sold, so that is up from last week's. Just like everything else was. Under contract down, pending down, total is down. And there's your withdrawals expired. No new condos sold, and 22 still active, so they haven't built many new ones. All right, so how do people pay for these condos? Well, half of them paid with cash, 37.5 with conventional, 6.25 with FHA, and 3 and other was the VA and the others. Now, the numbers right below here are the total units, so I'm showing you those. Your total is 32, but that breaks it down by the cash, conventional, FHA, VA, and other. Here's our foreclosures, and they stayed the same as last week, so it's probably the same units. Okay, now we take a look at the same thing, condos that sold under list, at list, and above list, and break down the percentages there. None of them sold above list. Now there are 2 that will show MLS above list, but when I looked into it, they really weren't, okay? I think someone made a mistake on inputting the first one because it changed the price the same day, but you know, once you put it in, it takes it that, so it really wasn't an increase. And below are the units also that correspond to that. Okay, here we go by the categories, the ones that sold for 500 above, 400s, 300s, 200s, and below 200. So as we can see, there is a difference here. Condos that sold above 500, okay, just about 1/5. Condos in the 400s, less than 10%. Condos in the 300s, okay, also less than 10%. And the big winner there is the condos in the 200s, okay, that's at almost 35%, and the ones below 200, 1/4. Down here is the amount of units sold in those categories. Okay, once again, nothing new with the new, so we move on. Okay, because of the law that breaks it down that says condos 3 stories and above, and also the age, 25 years usually on the coast, 30 years inland, I show, just for grins, how many sold the particular stories. Now these total stories, that's the total of the complex, not the individual condo unit. So that complex that had 1 stories, 2, 3, and so on, we wanted to see if there was any trend, you know, where people were gravitating more towards the 1 and 2 story condos, but we haven't seen that yet. But here's the numbers anyhow, and I'll scroll down so you can take a look at the rest. Okay, and because like I said, we go by the year also for that law. So I'm showing here the individual condos and what year they were built, and then the total stories for that complex. So the first one was built in 1988. It was a one-story complex. The other was 2005, one story, 2002, one story, and so on. And I'll just scroll this down for you too, and then you can pause it if you'd like. Okay, when we break it down by counties for the condominiums, we see 4 were sold in Clay, 18 in Duval, 7 in St. John's, 2 in Nassau, and 1 in another that was outside our MLS. Okay, this chart here would break down what the difference was when it sold below list price. And over here you see on the third column, that is the difference. Okay, so the first one there sold for $325,000 below the list price, and then I just scroll it down. So I'll just scroll this down and you can stop it as you'd like to check it out. Okay, the next thing I go over now is the houses of the week. But before I get to those houses of the week, and I'll explain what they are, let's take a look at all about that insurance problem, the headline that I mentioned in the beginning of the show. All right, so let's take a look here what these headlines are here. Here's the whole headline. Florida insurers might leave thousands of Hurricane Milton claims unpaid. Okay, well, this referred to Hurricane Milton, but it also, there was a lot of other claims too. We've got this headline too: Florida's largest insurer denying hurricane claims sparks alarm. And here it talks about how Milton's insured losses approach $2.75 billion in Florida and over 230,000 claims filed. So this is raising a lot of concern with a lot of people. Now see, this here goes back to even Debbie. Okay, now we got hit with 3 storms here in Florida, okay, here. And so here we're looking at, it was Hurricane Debbie, where they say that three-quarters of the claims, closed without payment, okay? Citizens Property Insurance, okay, that's their largest insurer, and that is the state run for people that can't get the private insurance, has denied 77% of insurance claims related to Hurricane Debbie, okay? They haven't even finished the other 2 storms that just went through here. Now here it says that Citizens received the majority of all Debbie claims from Tampa and surrounding markets, which is also where the majority of Citizens policies count is located in this event. And that area received minimal wind damage, but significant flood damage. Now the thing is, okay, what happens is, why so many are denied is because they don't have flood insurance. A lot of people didn't have flood insurance. This was probably the biggest reason here. And down here you see, they say, in order for a consumer to qualify for a FEMA emergency grant, they must submit a flood damage claim to their property insurer and prove that it was denied, okay? So that is what is going to trigger all the claims, even if they know they're not going to get it, just because of the way the FEMA works. This is what you'd have to do. And these are for people that are looking for grants that didn't have flood insurance. Now, the flood issue isn't the only thing. Other reasons claims get denied, and they've got here where they mention is insufficient information, on the claim, missed premium payments. That I'm telling you, you missed the payments, they're going to look for a reason not to read your policy. Okay, is there a grace period that you would still be covered? I don't know. That's an individual thing. You got to talk to your insurance agent about that. But here's what they're saying. Missed premium payments is a reason a claim was denied. Okay, fraudulent claims and missed filing deadlines. Be aware of all that. That is going to be in your policy, and if you've got a good insurance agent, they're going to keep you abreast of what your policy is. Now, State Farm, did take an issue with these headlines, and probably rightfully so, because it made it look like they're just denying all the claims, when a lot of it, there are a lot of other factors that go into it. And when they look at claims that do qualify for, being paid, they're very good about paying it, what they claim. And here, they made this comment here, and as an organization, we take great pride in our customer service, committed to paying what we owe promptly, courteously, and efficiently. Here they talk about some other factors too. And many factors affect the claim, and the type of loss is the amount of a customer's deductible or hurricane deductible. And those hurricane deductibles are high. So if the damage, was within that deductible, then the claim will be denied because that's part of your deductible. And of course they go into, flood damage, which is excluded from the homeowner's policy. Then it wouldn't be covered either, although they say that they may file a claim with their insurance company to obtain the necessary paperwork to pursue disaster assistance from the federal government. So basically saying the same thing as what happened there. For the longest time, and I remember even when I was a kid, hurricanes were always associated with wind damage. Always the wind damage. Oh yeah, you had the storm surges along the coastal areas and like that, but not like what we see now, not the rain events that we're seeing now. So now, hurricanes now are more associated with flood damage, just like, in the last few years, especially Irma when it came through here, and then in a lot of parts of the state that are, even if people are in a flood zone X, they were still getting flooded, and so they were thinking, well, I didn't get flood insurance because I don't have to and all that. Now, where I'm at, the area I'm at here in Northeast Florida, believe me, I'm not getting flood insurance because my house isn't going to flood. If my house were flooded, then the whole state of Florida would be underwater, okay? And someone would be building an ark. So it's a decision you gotta make yourself, and look around, look at different maps and stuff that show where flooding was, where houses were damaged. Now it's required for the seller to actually disclose that information, and there's actually a form for it so that if there was any previous flood damage, because now it is becoming more and more important. All right, now let's get to these houses of the week. And the houses of the week is where I take a house that's sold below list, a house that's sold above list, same with the condos, and I look at their history, how long they were on the market, how much difference did people make off of it or lose off of it, put it into an appreciation calculator if it's applicable, and we look at all that. And just to let you know too, if you're looking at buying or selling up here, I am licensed in the state of Florida, so anywhere in the state I can help you with your purchase, and writing up that contract for you. Just contact me at these numbers here below, and also the email that you see there. All right, let's get right to it now with the houses of the week. All right, here we are. We're going to start off with the house that sold below list price. It's located in Bradford County, built in 1970, 3,394 square feet, good size house, 5-bedroom, 4.5 bath. Okay, when we look at the history of this, we see it started off at $599,990, so basically $600,000. Okay, they started lowering the price after like 48 days to $550. They ended up after 226 days taking an offer for $475,000. Okay, that works out to $139.95 a square foot. Okay, now this one had concessions also of $35,000 that we're going to take off of that. Okay, when we look at what they paid for it, we see they bought it in 2020 and they paid $295,000. When we put that into an appreciation calculator, okay, the sale price for $40,000 is what after I took off that $35,000, because that was a substantial amount. So they came out with an appreciation over 14 years of just over 5%, which is about right. Okay, so 5 to 6 would be about what you'd want. So that is about right. Okay, next we look at the house that's sold for above list price. This is a new home built in 2024, located in Nassau County. Okay, 1,820 square feet. 3-bedroom, 2.5 bath. We look at the history on this. We see it started out at $384,790 and stayed at that for 25 days. After 25 days, they raised the price to $422,290. After 101 days on the market, they got an offer for $412,190 and they took it. Now, these are people that probably thought when it first came up, oh, nope, these new home builders, they're going to lower these prices. They're not going to get that. Well, this one went up, okay? And they ended up paying more because they waited, if they're the ones that did actually wait. Since it's, let's see, this here worked out to $226 a square foot, and since it's a new home, we don't have an appreciation calculator on this one. Okay, next we're going to look here at the condo of the week that's sold below. All right, 1974 in St. Johns County, 1,200 square feet. Okay, it's a 2-bedroom, 2-bath. All right, let's take a look over here. Their monthly fees, $988. That's $1,000 a month. You think that's going to be going down? Okay, when we look at the history, they started off at $625,000. After 37 days on the market, they got an offer for $550 and took it. That works out to $458 a square foot, and there was no concessions. Okay, they bought this back in 2004 for $365,000. We put it into an appreciation calculator. They only got a little over 2% over 20 years, so they did take a beating on this. Maybe through a few downturns, the 2008 mess, what we had now, and the condo crisis now. So this was a loser. You know, if you're looking to buy right now, I mean, it's tough. Okay, there's a lot of folks that they don't have to buy, so they can wait out, and then right or wrong, if you're trying to time the market, generally, it doesn't always work, okay? But, you know, they do have that, you know, luxury to do that. But if you're somebody that needs to buy a house or sell a house for anything, for, you know, job location, you know, health reasons, being closer to the hospitals, family, stuff like that, or you need to downsize to reduce your cost, you know, there's all sorts of reasons. You really got to get all this information and figure out what you want to do, and try to do the best you can out there. It's always tough trying to play that market. I mean, it's a gamble, okay? Now, this is week 24, and it is in the can. And until Sunday night show, I'm out of here.